Let's get the read from market watchers Aquilles Larrea and Mark Matson on what it's going to mean at least this month. You know, Mark, I ended with you. We ended up a lousy May, so are we looking at a June swoon? What do you think?
Okay, great, Neil. So look, June swoon is a nice soundbite. Very catchy, but it has no real application in building a prudent portfolio for your retirement.
Well, how about
or to
June
educate your children or for your
June
future.
Zoom more?
June Zoom.
Okay.
That's very catchy too.
Sure, that's what I do.
Look, the reality is nobody can predict a short-term movement. Like we know throughout history, the next 100% movement in the market is up. But the next 20% of the movement, up or down, no one can tell you with anything like accuracy. So what an investor has to do is ignore, which is really tough to do, is to ignore the short-term volatility and focus out on long-term on their retirement. So own equities and diversify. And as they keep going down, if they do go down, keep buying more as they're cheap, and you'll benefit when they come back up.
You know, Aquilles, if you look at it, this is a unique situation with Mexico because we already have a trade deal with the Mexicans and the Canadians. So this will disrupt that. It will complicate for U.S. companies that have shifted some operations. I believe GoPro was one of them to Mexico, places like Guadalajara. And now they have to rethink that or maybe wonder what other grenade will drop. What do you think?
Yeah, absolutely. We're kind of scratching our heads on this. We know short-term stocks are going to take it on the chin. They're going to feel a lot of pressure. But we also, I have a lot of Latino clients, and we're all scratching our heads trying to figure out what's the end game as far as the trade war with Mexico is concerned, because they're concerned. They have a lot of things going on there, and we just don't get it at this point. So we're wondering, is there something else behind it, or are we seeing the beginnings of a trade war that's going to escalate and hurt us all?
Maybe the president has no intention to deliver the tariffs to the degree he says he would on this, Mark. That makes me wonder if this is serving any other purpose, or am I missing something?
Well, I'm a big believer in. I'm sorry. I'm a big believer in free markets, and yeah. And the more free the markets are, the better for the consumers, the better it is for innovation and technology. So tariffs don't really do much good for anybody. But look, the reality is companies are extremely fast at adjusting their capital, their structure, their inventory. Not only just trade wars, but real world wars. If you look at even global world wars, the markets always have taken that into consideration and then prospered, sometimes even during the war. So all the knowable, predictable information about the tariff is already priced into price today. It'll only be the unknowable stuff in the future that changes it.
You know, Aquilles, looking at our own markets, they don't know whether to push forward or drop back. We've seen that with stocks. We've seen it in bonds today. Got as low as 2.07% on the 10-year note. I think we're around 2.12 now. Regardless, in and out of record low rates, at least over the last two years. So play this out. I mean, if it's a tug of war over the prospect for trade, whether it's with China, whether it's Mexico, how do you, as an investor, deal with that?
Well, I want you to think, if let's just say we're at 2.13%, there is an opportunity for mom and pop investors to go and refinance right now. So there is a silver lining where they can go and refinance their homes. You know, that's one silver lining to it. But there is a challenge on the yield part where, you know, the 10-year yield seems to be the only game in town. I mean, what are you going to do? You're going to go into Russia bonds or other third world company bonds. So a little bit of difficulty there for the near term.
All right. Guys, I want to thank you both very, very much.